Hello Doge family, how are you today? Doge lovers, before going into details, I would appreciate if you like the video and subscribe to my channel. Together we will grow Dogecoin. What I say in my graphic predictions are always right guys. I hope it is useful for you. I will determine the buying and selling points for those who want to make short transactions. And I will tell you the important developments today. Guys, so far, 2021 has been a very exciting year for cryptocurrencies. The popularity of DeFi tokens, NFTs, and smart contract platforms has increased this year, but the most intriguing instance has been Dogecoin, an alt that many still refer to as a meme coin. Doge rose to record highs of $0.739 due to aggressive purchasing in the first few months of 2021 as it sought to break free from a shadow that painted it as nothing more than a joke. However, the crypto crash on May 19 significantly hindered Doge's trajectory, and doubts have lately been raised about its usefulness element as well. Dogecoin was selling at $0.174 at the time of writing, down 5% in the previous 24 hours. Doge's most recent rise was a 73% increase from $0.163 to 28 cents at the end of June and early July. Since making this move, a general lack of trading interest and volume has harmed the price, causing Doge to fall towards its defensive line of $0.163, wiping out virtually all of the gains earned during the bull run. Reasoning over the last several days, the relative strength index has been trading in the oversold zone, a place that does require a price reversal. During Doge's previous rise, the index was in a similar position. However, the D of the directional movement index moved further away from the plus DI, indicating that a negative trend was strengthening. This trend contrasted with that witnessed during Doge's last ascent, which saw the D and plus DI inch closer together. The awesome oscillator did show some bullish momentum, but not enough to cause a price move to the north. Conclusion: while there was some data to support a bullish narrative for Dogecoin, traders should exercise care before launching a long trade if it hits $0.163. A closing below the 200 SMA green may increase losses in the following days, making a wait-and-see approach the safest option in the market right now. This is the only safe strategy for Dogecoin investors. 2021, so far, crypto a pretty eventful year for. This year, DeFi tokens, NFTs, smart contract platforms have become increasingly popular. But one of the most interesting cases has been Dogecoin, which many still refer to as the meme coin. Investors of Doge, which has been in decline for a while, are now considering which strategy to use. Here are the comments of an analyst on this issue. Significant levels for Dogecoin. During the first few months of 2021, Doge's price reached an all-time high of 73 cents as a result of aggressive buying. After reaching highs, the crypto crash on May 19 severely hampered Doge's trajectory. Doge's last rally was observed when the cryptocurrency surged 73% from $0.163 to 28 cents between late June and early July. After that, Doge dropped towards the $0.163 defensive line, negating almost all of the gains made during the bull rally. Also, lack of commercial interest and volume were some of the factors that hurt the price. Also worrying was that Doge fell below the 200-day simple moving average for the first time since October 2020, due to the high bearish sentiment in the market. I showed this level in green on the chart. An argument could be made that $0.163 could trigger the next Doge rally, but the threat of another breakout cannot be ruled out. What is the best Doge strategy? The relative strength index has been trading in the oversold zone for the past few days. This is an area that guarantees a return on price. The index was in a similar position during Doge's previous rally. However, the directional movement index suggested that the downtrend might be strengthening. The awesome oscillator. Guys, let's have a look. What happened today? The agenda is important to us. We need to be aware of everything. I see BTC still dropping around 14 to 15k. Bitcoin's 50-week MA is also a potential bottom. Looking at the Bitcoin weekly chart, Magic said that the 50-week moving average value could also be a floor. Bitcoin thinks this level should be noted as a potential bottom as it has been above its 50-week average for a long time. In addition to this moderate scenario, put forward another scary scenario for Bitcoin holders. This is the assumption that Bitcoin could drop to the $14,000 to $15,000 range. In light of his first scenario, he thinks it might be profitable to gradually accumulate Bitcoin. He talks about the importance of the 50-week SMA in the tweet below. It is important for BTC to stay above $31,000 for the weekly close in terms of technical analysis. The daily BTC chart below highlights the position of the 50-day, 100-day and 200-day MAs, as well as the 50-week moving average mentioned above. According to this graph, the following inferences can be mentioned. The $30,000 to $40,000 price range remains an important region, depending on the size of the volume profile on the far right. $31,000 is the level to watch in tonight's weekly close. Bitcoin trading volume has been in the green for the past 2 days after MACD's histograms confirmed the decline. However, the MACD and the signal line do not foresee a bullish scenario for Bitcoin yet. The daily MFI and RSI are at 30 and 40 respectively. So it's in slightly oversold territory. In the neutral environment above, a wait-and-see approach would be more appropriate for Bitcoin, at least until the weekly candle closes later tonight. This closing price could provide additional data on where Bitcoin might head next week. There was a flash development regarding Ethereum today. The founder said, despite the fact that Ethereum, the second largest cryptocurrency by total market capitalization, has fallen by 50% or more from the peak, bullish expectations still continue. Joseph Lubin, one of the co-founders of Ethereum, stated in his recent statement that everything will change after the expected hard fork of Ethereum. Lubin. A significant price increase with London. Lubin thinks that Ethereum will experience a big change with the London hard fork, which will be held in the first week of August. London, which will come after the Berlin update, also takes critical steps in the transition to Ethereum 2.0. In particular, the Ethereum Development Protocol 1559, which is included in the London hard fork, is even more exciting for many investors. In his interview with CNBC, Lubin emphasized that he thinks that the demand for ETH will increase as well as EIP 1559 and that the price will be positively affected by the constantly decreasing supply. With EIP 1559, some of the miners' revenue will be used to buy ETH from the market and burn them. In the long run, this will both solve the supply problem of Ethereum and reduce transaction fees. Considering all this, Lubin emphasized that he thinks that the price of Ethereum could increase incredibly in the future. Ethereum, on the other hand, continues to decline along with the rest of the market and is trading at $1,900 as of press time. Ethereum fell 8.1% in 7 days. Although the London hard fork has increased the expectation, the decline experienced by Bitcoin is bleeding the whole market, including ETH.